All right, welcome everybody to another episode of Not Investment Advice. We've got the NIA boys here. Before we even do anything, we got to kick it off with Meme of the Week. All right, but before we do that, we got Trung Phan here, Meme Master Flex, lead writer at The Hustle, and we got Jack Butcher, founder of Visualize Value, and myself, Bilal Zaidi from Creator Lab. And anyway, so boys, it's been a crazy week. The only way to start off is with Meme of the Week. And Jack sent this one in a group chat and we were absolutely howling, man. So for people who are only listening, it says, holy shit, bears are fucked. And it's that crazy face like, oh, and it says 1% up. Because as you all know, right now is the complete opposite of that. Everyone's hurting. Everyone's in the absolute shitter. Things are down. Everything's red.
No, but we need to talk about how insane. We're recording on Monday, January 24th. The comeback of the Dow. The NASDAQ was down 5%, I think, today. And it's up 0.5%, and we're celebrating. Pump just texted or tweeted that the bear market's over. Hey, people, that was a good run. That was a tough 2 weeks.
So look, we're gonna break it down today, man, because this has been hurting my soul, man. You know what? We talked about this a little bit a few episodes ago. Or no, actually, do you know what? We did that whole episode on when will there be a bear market? Remember? That was a few months ago.
Fad Bilal.
Fad Bilal, exactly. Yeah.
No, Bilal was like, when the bear markets come, I'm not saying that it's gonna happen, but if it comes, I just want you guys to know to be ready.
Yeah, exactly. That was me. And I had a plan in my head, and as soon as it happens, you're like, no. I'm dying right now. What do we do?
Everybody's got a plan until they get punched in the face.
Exactly.
Mike Tyson.
Yeah. So anyway, let's let people know what we're going to talk about today. I think there's only one place to start, which is going to be basically explaining what the hell is going on. The last few months have been kind of brutal, but since January, especially, both the stock market, crypto, all of growth stocks. In fact, S&P 500 also been down across the board as well. So we're going to explain kind of what's going on, or try our best to understand what's going on that side. Then we're going to talk a little bit about arkk and versus Berkshire Hathaway. This is kind of a story that's come out in the last week or so. We'll explain the significance of each of those, but essentially value stocks versus growth, and how our boy Warren Buffett is playing catch up. And he seems to be
he's playing chess and we're playing checkers.
4D chess, exactly. And then Trung brought this one up. We're going to talk about McDonald's because, the meme of McDonald's, and open up a discussion on earned media. So we'll just save that there.
What McDonald's meme are you talking about, Bilal?
Well, basically the fact that we're all going to be working in McDonald's soon because we're all broke, which is the...
Hold on. You need to explain the full crypto joke.
You're the meme guy. Let's hear the
you guys tell me if this is correct. The crypto joke is everybody that's been making money in cryptos and meme stocks have not had to work at McDonald's because all their stimmy checks are up 100 times. But now that everything's imploding, they're looking for work.
We're going back to basics, man. So yeah, let's get to that. That'll be later in the show. And then if we get time, we'll talk about the new Twitter NFT profile pictures. I kind of want to get Jack's take, as he is our NFT dude on the pod, get his take on that, if it's a good or bad thing. So let's just get straight into it, boys. I mean, look, it's been brutal time. We're basically at the end of January here. If you look at the highs of Bitcoin and Ethereum, we're down about 50-ish%. Let's just say half the price from the highs. I think Bitcoin went up to 69K fittingly, and it's gone all the way back down to 30s. Ethereum went to like 4.5, 5K, and is now down in the 2.5 range, basically. So, so that is obviously on the crypto side, but even on the stock side, across the board, we've seen, a bit of a correction. So S&P 500 was down, I think, 10 to 15% this month.
Year to date, it's about 8. Year to date, it's down 8%.
Year to date, but I think, did it go even lower and it's kind of recovered a bit, or?
Yeah, before today, it was at minus 8% for the year.
Okay, cool. So either way, it's around, let's say 8-10%. And that's across the board. For growth stocks specifically, we've seen the stories of Peloton, crazy drops. Zoom,
the pandemic favorites.
The pandemic, exactly. Those are all down significantly as well. So where do we start here, boys? I mean, that's kind of just painting a picture. Like, I guess, Trung, maybe we take it over to you. Like, from your point of view, you're covering this every day. what the hell is going on in the market, man?
Well, Bilal, you were mentioning the ARK versus Berkshire. I think that's actually a really good frame to talk about this, because those two, first of all, they're great memes in themselves, right? Like Berkshire, Charlie Munger, Warren Buffett, old school. They're not about this new techie stuff. And then you have ARK Innovation Fund. So ARK, we've talked about on the show a lot. Let me list to you guys their top 10 holdings. You might have heard of these names. Tesla, Teladoc, Coinbase, Zoom, Roku, UiPath, Unity Software, Twilio, Square, and Spotify. So they're obviously, and Shopify. So they're extremely, betting on the future and innovation, and profits be damned. It doesn't really matter, right? So a lot of these companies are not profitable, and they are also very pandemic related names. But the chart that one of you guys put in our chat yesterday was of how basically since the start of COVID, Berkshire Hathaway has essentially caught up to ARK in terms of performance, right? And Berkshire Hathaway, we talked about, yeah, exactly. That's the chart that you showed.
Here's a chart for people
insane,
only listening.
Right?
Yeah, you can see. So there's a red graph, ARK Innovation ETF. They've got a few different ETFs, but this one's Innovation Fund, yeah. And then Berkshire Hathaway, steady.
Well, Bilal, describe the ARK Innovation one, like visually, and describe the Berkshire one.
It goes from Q1 2020. It's a huge jump, very steep. And then we've seen a steady decline.
Yeah.
Like a few big drawdowns. I sound like one of those chart guys on YouTube, by the way, which is basically the same thing. Yeah, we see an upward trend and a downward trend. But anyway, so we got that on the ARK side. And then Berkshire Hathaway is the nice, steady growth, going up and to the right slowly. But now it is kind of meeting and taking over again.
You actually want to know what's funny is if you look, we didn't pull it up here, but people can look afterwards. But if you look at Berkshire versus the NASDAQ in the .com bubble, same thing. Things were ripping up. Berkshire just steadily picking away because Buffett never invested in tech at that time. And if you look at what's interesting about Berkshire, and Josh Wolf, the venture capitalist, tweeted about it yesterday, was like, yeah, Berkshire just buys cash flowing businesses, right? And they compound. And that's what happens when you let something compound. It just steadily just keeps creeping up, whereas these meme stocks obviously rip up and down. But the thing I'll say about Berkshire, which is interesting, and we can explain why there's been this rotation from value to growth. So just to put that in perspective, is that ARK, since the beginning of 2021, is down more than 40%, while Berkshire over the same time span is up 30%. So like this is from the beginning of 2021. So Berkshire Hathaway, they have their stock holdings and their operating businesses. Their operating businesses are really, really old school. I mean, like old economy or like forever economy, energy, utilities, railroads. They own like the biggest railroad network in North America, and insurance, right? So all these businesses actually do well in a rising interest rate environment for a couple of reasons. Insurance and banking. So banking is a huge part of their investment portfolio. Outside of Apple, Bank of America is Berkshire's largest equity position. So in a rising interest rate environment, banks, they have a better spread on like their bank lending, right? So like right now they're paying us dick in terms of our savings accounts. They can bump it up a little bit, but they'll get way more as an interest rate. So their spread gets bigger. So they benefit. Same with insurance companies. And then also energy, utilities, and railroads. In a growing and an improving economy, especially one with supply chain constraints we're having now, all those prices go up. So these railroads that people are making fun about Berkshire for the last 3-4 years, like, oh, who needs railroads? Turns out we all need railroads, and they own the biggest one, and all the rates are going up. So they're just like, it really is the dichotomy between old economy and new economy, and they're winning right now. And investors are throwing money at them because they have cash, and they're a money printing machine. So this is actually one of the, according to Wellington Asset Management, one of the most aggressive rotations from growth to value stocks that's ever happened in the history of stocks. So that's how.
Trung, let's break that down a little bit, right? So for people, people might be grouping growth stocks, like we hear meme stocks, but they're not the same as big tech, right? So and there's the Pelotons, the Zooms of the world that are obviously legitimate businesses. well, legitimate's a loose word, but they actually serve customers. They have paying customers. Obviously, they've built brands. Versus a GameStop, which obviously is a real business, but what drove that last year was that kind of meme sensation to a certain extent, right? Obviously, there was some fundamental analysis by username 727 on Reddit, and that kind of seeded this whole thing, and that kind of blew up. So we've got on one side of kind of like the curve of risk reward ratio, you've got these meme stocks which are based on mostly narrative. Then we've got
we'll take a Zoom. Yeah, Zoom, Peloton, Roku, Twilio, right?
And that
these are go ahead.
So no, go ahead.
Yeah, so let's bucket the high growth names into like cloud businesses that are capturing this tailwind of everybody shifting to cloud, right? So like Teladoc, Twilio, Zoom, Shopify. It's just about real world businesses going online. So cloud related businesses. So these businesses call them high growth, right? Because they are growing quickly. They're growing 40, 50, 60% a year top line revenue. To your point, they're not making a lot of money or maybe zero profit or losing a ton of money. And basically all of their value is being calculated from 5 to 10 years down the road,
future earnings.
Exactly. Yeah. So, and then it's so great that you actually tease that out, because people are wondering, like, why are higher interest rates like bad for these stocks? It's because if you're expecting profits 10 years from now and the interest rate rises like today or over the next 12 months, you're going to discount those profits at a higher interest rate. And then you can just do the math yourself.
So the value goes down.
Discount something, the value goes down. The present value of those assets go down, right? If the interest rate is zero, there is no discount. $100 in 10 years is worth $100 today. But if the interest rate is 5%, $100 in 10 years is going to be worth whatever, like $40, $50, $60 today, right? So that's kind of like the math that's happening right now in the stock market. All the things are getting smacked. People are expecting, I think, 3 or 4 interest rate rises. And that kind of, and again, Berkshire, which is the perfect counterexample, they have all these assets that benefit. Outside of Bank of America, they own US Bank Corp, Bank of New York Mellon, MasterCard, Visa, Wells Fargo, and then obviously Apple, which is like just the greatest money printing machine ever. So I think it's a really good, I know we were supposed to talk about Berkshire versus ARK afterwards.
But I think it's a good frame to say the wider thing, because, and then just to finish what I was going to say so we've got the Pelotons, the meme stocks on the other side, and then we've got, let's say, a Google, Facebook, Amazon, like let's say Amazon, right? Yeah. Amazon has been flat basically for the last year, even through the pandemic, I'm pretty sure, right? I don't know the exact number off the top of my head. And even when interest rates in the last few months, when the speculation came out or confirmation that interest rates were going to go up this year, a lot of those growth stocks, they're still growth stocks though, right? They still count as growth stocks. So the value of those became less, like you said. But they are obviously I guess what I'm trying to say is, for people who own those stocks, or, we all follow those businesses, they're like the best businesses of all time. That doesn't mean overnight they became terrible businesses, obviously, right? They're still the same businesses. It's just the value of them has been recalculated based on the macro environment.
100%.
And so now these other stocks, the value stocks, just become more attractive in the short term, I guess, right? And because of that movement, the supply and demand of that changes the price as well.
Well, actually, so let's talk about what exactly is a value stock, right? There's different definitions of it, but it's like one commonly held definition is like, what is its price to earnings ratio, right? How much are you paying for a dollar of earnings for a quote unquote value stock? So let's say that a high growth stock is whatever, 50, 60, 70 times earnings. And then a value stock is like 10 or under, right? So basically their per dollar earnings is being valued less because it's not expected to grow as much. And people think that it's a mature business. So historically, over the last 100 years, this is actually crazy. I read about this morning. I didn't realize it. Growth has only really outperformed value as an investment class over the past 15 years. But if you look over the last 100 plus years of stock markets, or whatever, called the early 20th century, value consistently outperforms growth. So like the last 10 years really might have been a blip. And that's what people are wondering now, was it just a blip? But then the other side of the coin is stuff you mentioned and stuff we've talked about in the show for the last years. Like everything's going to internet, everything's going to cloud, right? These things are pretty inevitable in our eyes. And that gives the feeling that growth is going to continue winning. But yeah, that's the value proposition is winning out in the last 3 to 6 months. And if interest rates continue to rise, I mean, not investment advice, but it could get ugly.
So, Jack, anything from your side, mate? I know you've sent a few threads in the group chat, in the Telegram as well, around, you know, kind of analysis on what's going on. And I know for your own self, you're buying a house or bought a house, you sold your bored apes, and stuff like that. So just
you called the top. We need to talk about how Jack played this. Unbelievable. He bought bored at the bottom. So, well, I don't know. What is the situation with bored apes right now?
No, they're still, I think they're 90 ETH.
Okay.
Oh, damn.
They're holding up. But ETH has obviously been shattered the last week or so. But no, I think it was a really good overview you guys gave. I was just contemplating the bigger consideration between value and growth stocks. And I think the interesting thing about all these internet businesses is like they don't have moats like railways and energy companies do, in the same way that like people rely on them for, I think when like the market is indicative of people's like fear and greed, whatever. And these are almost like survival utilities. And the difference in the world of internet stocks and growth stocks is they're speculative in a different way, right? Like Spotify, no one's going to die if Spotify goes out.
Last week, Trung Phan did say that Wi-Fi is more important than water. So,
well, you know what? There's obviously a lot of people stop making money, but if some energy company goes out of business, like the real world ramifications of that are very severe. And also thinking about like the cost of technology being driven down over time, and like not how easy it is to compete on the internet, because we know like internet monopolies have huge moats for different reasons, but you can kind of start to see how like people who didn't grow up around it just see it as like a less robust place to put your money, which I think is a completely fair analysis. I don't like the companies that keep people alive at a base level, like we're talking about like the Maslow's hierarchy of needs. I think when you get to
Berkshire.
the top, the businesses that serve the needs at the very top of that pyramid are obviously gonna suffer when like triconditions tighten in some way, shape, or form. And then it feels like the businesses that print money consistently are at the bottom of that triangle, where it's like food, shelter, insurance. Like, you know, when people, insurance is kind of a
safety.
I don't know. Yeah, I don't know the specifics of insurance businesses, but it's like that's the definition of printing money, right? It's like you have all the information you need to charge more than it's going to cost you to insure something, and it makes total sense why people who read and analyze numbers buy businesses like that. And then the other thing that we've talked about on this podcast many times is like people investing in things that are growing at a faster rate because they feel like they've been left behind, you know, like the 6% or the 5% return over 30, 40 years, when you just feel like, you know, that's not a material amount of wealth generation for a lot of people with the money they have left over to invest. So a lot of this is behavioral as well. And growth stocks, meme stocks, crypto are also a function of like the mentality of the market and the speed of information moving around. And it's a really interesting conversation. And it does, when you're in the middle of it, you feel like, oh, this is going to go on forever. But then like the macroeconomic environment is way more important than you give credence to a lot of the time. So good conversation, boys.
Yeah.
And
go ahead.
Go ahead.
I was just going to say that thread that we shared, I think in the Telegram group, was written by Tarek.
Saw that one? Yeah.
Tarek Mansour, who's the CEO of Kalshi, right? And that's a very elegant way to plug at the bottom of the thread that they have a betting market for the rate hike tomorrow. And I think the betting market is like 5 times heavier on the rates increasing. So rarely our betting market's wrong, and we'll see how that shakes out.
Yeah, fair enough.
The interesting thing as well, though, is from what else I read, the prices have potentially been adjusted for this rate hike, right? So
well, it's been expected, right? It's been talking about this 6 months now.
Exactly.
People knew it was coming.
Exactly. So
but now it's the
not
severity.
Like tomorrow, exactly. Now it's a question of how bad is it? How much do they go up, or do they actually just say, actually no, we're going to keep things going as is for now. So there's that thread. We will share that actually because it was a pretty good, like a really nice, simple way of summarizing, like the basics of all of this. So I get the question I have for you guys is, now that we're kind of in this correction, whatever you want to call it, right? I don't know if we even count this as a full bear market yet. I don't know of the definition. But from your point of view, how are you personally, I don't want to say playing it, but just like, is there anything that changes, I guess? And I think, Jack, specifically, you'd mentioned something about risk tolerance and even like taxes and stuff like that, planning for that. Because I know when we talk privately about this, like one of the things I didn't do that well either is like plan ahead for this year. Like, okay, in April we got to pay taxes on all the crazy stuff that was happening last year. And one of the things I remember you saying was like, oh, I'd probably just sell along the way enough to make sure I've accounted for the tax. So I don't know if that's, that's a few questions in one, but I guess the question is like, now that we're kind of in the middle of all of this, there's a lot of speculation, there's a lot of emotions flying around. Are you doing anything differently now? And again, this is not investment advice, but I'm curious on how you're seeing things as they progress.
We our private conversation, we talked about tax obligations as well. And I think because of that, like explosive year of activity in crypto and NFTs and all of that, the market frenzy essentially of 2021, I think the general comprehension of like tax obligations as a result of all of the activity is like massively misunderstood. So like people are like looking at their P&L now versus like all the activity that happened last year. And if you didn't take out what you needed to take out on December 31st for your tax obligation, it's a good chance it's like a much larger percentage of your portfolio now. Because
things have dropped in price, right? So
yeah, so you've taken at the end of the year, you're being taxed on your realized gains for the year from January 1st to December 31st. And the really difficult thing to manage is obviously you pay your tax in a currency that does not fluctuate in value relative to another currency. So
crazy idea.
It's a crazy like there's so many data points you have to keep track of, even just to like meet your tax obligation, which is a very like heady thing to be doing. At least even if you're trading in and out of stocks, like they're priced in USD, and if you lose money on your portfolio,
I love this perspective.
You lose
like,
money
even with stocks.
But if you make no money trading the stock market, or you lose money trading in the stock market, you don't owe the IRS anything, right?
Right, you're saying if you don't sell anything, that's what you mean. If you didn't realize a gain or a loss, you're saying.
Yeah, or a loss, right?
For crypto, there are some occasions which you do actually have an obligation, is what you're saying.
Yeah, like even if you buy an NFT with Ethereum that's appreciating in value, there's a taxable event for the fact that you technically sold that crypto to buy the thing. Oh yeah,
insane.
So you could have bought Ethereum at $500 and then you sold it at $3,500 to buy an NFT that's now worth nothing. You not only do you have a worthless NFT, you have a tax obligation on that Ethereum transaction. It gets pretty.
Has your accountant been like, "Yo, Jack, what's going on?"
Actually, you know what? He looked at the P&L and he's like, "Oh, this is way less crazy than I expected." Because he was expecting like the DeFi staking and the bridge into this and that. And I'm not like, I didn't go down that rabbit hole.
You're not DeFi.
I didn't go Bilal levels, but the like this is P&L in the same way. Like if you were just trading in and out of tokens, right? That's how NFTs are like on your P&L. And thankfully, a few plays make up for all of the like idiocy or the things that didn't work out. But someone had a poll on Twitter recently. It's like, have you cashed out your tax obligations for April? And it was 80% of people said no. And that's just a crazy statistic that like, I think the market is so young.
You're just like,
it's nuts, right? It's like, I think a lot of people think, oh, if I didn't make any money, I don't owe any tax. And it's not that simple. And that's like,
well, to be fair, it's a little bit complicated, right? Like,
that's true. It's all new, and there aren't like very clear rules in many ways for a lot of this stuff, because like the definition is an old definition, and we've created new forms of activity basically. But I think like the NFT one is actually fairly straightforward. Like if you're buying, like there's two parts to that one. One is the changing ETH to an NFT. The second is the NFT going up in price, and if you sold that, then obviously that's like anything else. Like it's like a normal piece of art. If you bought it for $1,000, sold it for $2,000, you made a profit of $1,000. So yeah, but I agree. Like the first part, a lot of people might not have accounted for that. The staking, they might not have accounted for that. The airdrops, another thing. If you got airdrop money, again, I don't know the exact thing here, but that was
did not account for that.
Did not account for that, and also like in that one example, like just sharing my own one, the ENS airdrop we've talked about on this show. Let's just say for easy numbers, let's say it's $10,000 at the time. If you had sold that at the time for whatever ETH was worth then, that was like your conversion at a time, but now ETH is half the price. So you're still holding on to that ETH, and you've got a tax obligation for something more. So yeah, it's going to be complicated in a few months as well for everyone. But yeah, hopefully everyone's not in a shitter by then to be able to pay their obligations anyway.
Yeah, I think like it's like I think if you've run a business for any period of time, you have to hold on to a certain amount of cash, whether it's 50%, whatever, put it in another account. And at the end of the year, a good portion of that is going to the IRS. And I think trading, there's a different people have a different relationship with that, right? Where they don't start trading half of their portfolio after every trade. It's because the model has been built in a different world where the obligations or the intricacies of it are different. So that changes things significantly. Yeah, but you know what? The NFT market seems to have, touch wood over here, not been too that's where attention goes and like keeps moving when there's not as much action in the cryptocurrency market. So
yeah,
people always want to looking for something to do.
Yeah, that's true. Trung, what about you, man? Any other thoughts on that? I mean, I know you're following this very closely. You're Mr. CFA, traditionally trained.
Dude,
but
means nothing.
Yeah,
it's all psychology. You guys know this, man.
Yeah, exactly.
I mean, it's just so funny. Been parroting these lines for the last couple of years during the entire pandemic. It's like, guys, just hold. You're in it for the long run. Just don't think about it. It's impossible. You can't think about it, right? It's like, well, like my brother will text me, he's like, how you doing? I was like, oh, don't worry, man. I'm holding for the next 10 years anyways. I'm not even thinking about it. I am thinking about it.
Definitely.
And it's definitely giving me anxiety. I mean, Jack brought up such a good point. It's like, when you're trading, you have such different mental accounting, right? And like so much of your net worth is just tied, because the entire time is running up like, oh, I'm worth X amount, right? And like, oh my God, this is amazing. I'm worth so much. This is the most I've ever been worth. That's what I'm saying. Most people mid 2021 was the most they've ever been worth, right?
Yeah, same, yeah.
Everybody's like, oh my God, I've never. So like everybody psychologically is like, wow, this is the feeling what it's like. I mean, the reality is this. The feeling what it's like when you're the richest you've ever been on paper is no different than it is now.
Yeah.
You just felt the drawdown.
And actually, do you know what's interesting on that, Trung? On the way up, let's just say, I mean, I'll make a number up here. Actually, I won't make a number because I'll psychologically say my own numbers here. But let's just say you're on the way up, you get to 70% of whatever you have. That feeling is, this is the best I've ever been. I've saved up. I've worked hard my whole life. I've been so smart. Then you get to the 100%, the peak of your powers, right? Which may have been at the end of the year.
Always fades sentiment. Always fades sentiment.
Exactly. And then you go back down to that same amount, the one that you felt great at, 70%. That is an interesting psychological thing, because now you feel like death.
It's loss aversion, right? We talk about it. It's like the whole Daniel Kahneman thing. The losing $100 feels infinitely worse than the happiness of gaining $100.
Completely.
And well, the thing is, I parroted, obviously. I mean, you see, it's just so funny on Twitter. You see people like quoting Charlie Munger, Warren Buffett. It's like, literally, these words, they mean nothing. You have to, I don't know how long it takes to internalize it, right? It's like these investors that have been through it 4, 5, 6, 7, 8, 9, 10. Actually, Kobe talked about it. Kobe talked about on Bankless, like going through the different cycles he's been through. It's just like eventually you get used to the cycle. You're like, oh, I recognize this feeling of like a 50% drawdown, right? Like I know this feeling. I've been through this before, but yeah,
but it's always different though, right? Like you get trained, like, and that was something we talked about in the bear market, like episode we done. Like, oh, well, in 2017, there's euphoria, 20K Bitcoin, and then we go down to 5 or whatever it was. And like you do kind of, not to over dramatize this, but like you kind of learn from that experience, right? Like, oh, what does it feel like if I held through?
Right.
Then like for me personally, I held all the way through to this great bull run, which a lot of people did last year. And then you're like, oh, wow, this is even better than before. And now we're going through a similar thing. Percentage wise, it might be the same, but the amounts are now greater.
Money bigger, yeah.
And
I think you actually bring up such a great point, because March 2020, because this week was comparable to March 2020 for a lot of the big tech names, right? A lot of us own, right? Exactly. Well, for the names that I'm sure you, me, and like a lot of our listeners own, right? Is like, well, like what's funny is that like in it, big tech and like these growth names, like I inadvertently constructed the ARK fund in my own portfolio. Like I own like half of our top 20 holdings just by like, oh, this readings, just copying people, right? Fucking memetics. And so I basically have some version of the ARK fund. And I know for a fact a lot of our listeners do too. And so March 2020, these drops are similar for these names. But you're right, Bilal. It's so true. I went almost all cash immediately in March 2020. Like, and we also thought it was the end of the world, right? So
yeah, and to be fair, that was a very different, like the age-old saying, hold forever, blah blah blah. Like it's very different when it's the first time in your lifetime there's a global pandemic. There's ships being sent to New York to pick up the bodies at the port, and you're like, oh,
dude, okay. I'm not laughing about that, dude. No, editor, cut that out. No,
I get you. But that is what you said. That's what you said before. It is all psychology by that point, and I guess the boring advice that we've read in 50 books or 50 tweet storms, which ends in buy the S&P 500, dollar cost average, don't think about it too much, focus on your income, blah blah blah. They're good advice for a reason, because that is how you last a long time, because you take the emotion out of it.
Exactly. That's it, right? You automate the buying and you just hold. So my old man's got this like 60-40 plain vanilla ETF. And I was trolling him last year. I'm like, oh my God, Dad, how could you do this to yourself? You totally missed a run up. Smoking me right now, completely smoking me. And
has it been in the DMs? I mean, the text.
No, I just know what his portfolio is.
Oh yeah.
And yeah, man, it's I think that's such a good point though. Is so this one, to answer your initial question, I really am just like there's nothing I can do. It's like I'm not locking in these losses, because I bought this time with the intention, this latest cycle of holding long term. And listen, it could still end up in the shitter, but I have to. Actually, Jack, you brought this up in the past. Is like how the crazy runs that we've had in crypto, NFTs, all these like meme stocks has created a whole generation of feeling like it happened so quickly.
Like that's how it's supposed to be. Like you get used to that.
But this is like exactly. Really is. But this is like forcing you to accept the down market, right? And just the last quote. So this actually will be some investment advice. Just the last quote I'll put is from Morgan Housel. Have you guys read The Psychology of Money?
Yeah, it's great.
Incredible book, right? The best line from the book that he wrote, the best chapter, was just like volatility is the price you pay for higher gains, right? It's like if I were to go to 7-Eleven and I want to buy Slurpee, that cost me $5. The equivalent is if I want these high gains, I need to pay in volatility. I need to pay in that anxiety. Like if you're not willing to pay it, then don't do it, right? And that's totally fair. And
you're right. The cost isn't always money. The cost there was the
no, but that's
anxiety.
it, right? It is
being
that.
in the cut. Like this morning, I went for coffee, and my girlfriend was like, "Are you okay?" And I'm like, "Yeah, I'm just having my coffee." But it wasn't that I was not okay. Like I was just thinking about stuff. I was calculating numbers in my head.
You're calculating, right?
Yeah, that's the overthinking that
you know what? There's a cloud, right? There is a cloud. There's literally a cloud just hanging, and you're just like, wow, like this is like not good. That's what it feels like. It's just like this is not good. But what are you gonna do?
Nature always wins, boys. Nature always wins. That's what it comes down to. Is like there's no free lunches, right? Like if you want like 69 million % APY, you might get it for 15 seconds, but you're gonna have to be looking at your computer with a 290 BPM while it's going on, and there's a biological cost to all of it. It's pretty remarkable that like. And the last thing before we move on, I would add is like, the amount of talent that drifts away from building in these moments is like unsustainable. It's completely unsustainable. Like where are the returns coming from? If 80% of people are just like at the casino, some people have to actually sit down and build something worth betting on that's going to be here in a year or 2 or 10 or 20 years. Right. And I think like it's painful to go through it in the short term, but man, like, the visualized value business, there's a legitimate drop off in interest in products that are about sitting down and building stuff. Because everyone's like, why would I do anything? I could just make 900% like flipping JPEGs. Why would I sit down and like,
wait, Jack, what's the name of that
information?
Product? What is the name of the product specifically of like
build once, sell twice?
People don't even want to build once. They won't even build. You're asking them to do one thing, and then they can just solve forever. They won't even do that.
Yeah, it's really remarkable. And I'm as guilty as everyone else. Like I've been messing about all year, but it's a great reminder. And you go through like cyclically, and you're in the middle of it, and you're like, there's no way this is sustainable, but maybe. What is it? The four dumbest words in investing. This time is different. Yeah, it's good.
Well, let's rewind to the bear market episode, because I think we said that a few times.
Yeah.
But anyway, just to wrap that up. So to summarize, interest rates are probably going up, or at least the speculation has gone up. That means the cost of money essentially goes up. There's been a downward pressure on future earnings in the valuations of these stocks. And there's a reallocation between the massive amount of money that are being invested in all the different asset classes. It doesn't mean Google, Facebook, Amazon are terrible businesses. It doesn't mean Bitcoin, Ethereum are going away tomorrow. It doesn't mean the apes are going away tomorrow. But that is just the general swings that we're all dealing with. So
if you're not investing in the S&P and just rebalancing, and what would you say? It was called dollar cost. If you're not dollar cost averaging S&P, you're feeling the pain like the rest of us.
Yeah. So, anyway, I will say just the last thing from my part. I think what Jack just said there was a perfect kind of summary around like the mentality shift of like, we're building stuff, we're doing work, we're doing whatever. And then for a year, the last year, we're flipping JPEGs, we're having fun on the internet, which is incredible. And I hope an element of that remains, but sometimes you need a little shake up. And like, I know Trung, we spoke about this in the last episode. Like sometimes you need a little kick and be like, okay, all right, I'm ready to do.
I gotta get back. I gotta do work, right? I gotta do some work.
Go write a few threads. Go write a few emails. Get on this train.
I definitely had that thought after our chat last week. You're like, you know what? Like, Bilal, you're like, yeah, I gotta do a little bit more work. Even Jack was like, I might have to get back into this course game. I'm like, I looked at my outline. I'm like, I was getting a little bit complacent. I'm like, oh, now's not the time. Like, I'm still young, and it's not retirement. That feeling of retirement that we had last year is gone now.
And the thing is, all of us have been I've been working through the whole year, but definitely
it did feel like
you did feel a little bit like, okay, we're gonna make it. That was the
easy mode. Easy mode.
It was the easy mode. Well, actually, let me throw one last thing before we wrap this section up. It's a mid-pod fun fact fan because it's about Berkshire. We need to talk about Buffett's deal for Bank of America. Just what a goon this guy is.
Is it one of the best deals of all time? Is that the frame or?
Yeah, one of the best deals. It's silliest deal ever. So 2011, he invested.
Silliest deal.
This is like, you remember like 2000 and during the great financial crisis, everybody's coming to Buffett. They want the seal of approval, the confidence vote that Berkshire Hathaway put money in, right? So he basically got a sick deal from Goldman. Every major bank and insurer went to Buffett. He only picked a couple to go to. 2011, Bank of America is in the shitter because they're being hit with lawsuits over the mortgage-backed securities. So who do they go to? They go to Big Daddy Buffett, and he gives them $5 billion for preferred shares, pays a 6% dividend, an annual dividend. So $300 million a year in dividends. And those shares convert, I think, at $7. So in 2017 or 16, I believe, he converted the preferreds into common, and he converted at $7. Do you want to know what Bank of America stock is now? $43.
Jesus.
So his holding in Bank of America is $43 billion now, I believe. It's the second biggest equity holding. And he just pumped in $5 billion in 2011. So over 10 years, he turned $5 billion to whatever, $40 billion now. He's bought and sold Bank of America along the way. But it's just, man, these guys are playing a different game, right? That's the whole thing. He waited 10 years for this payoff. You know what I mean? He waited 10 years for this payoff. And he sat. And he's sitting on cash. So Berkshire's got like $130 billion cash pile. So they sit for years and years and years
just
on these cash piles.
Just waiting for the right deal,
just
right?
waiting. And there's only so many they can do now to move the needle for him. Even back in 2001, he wrote in the annual letter, like, we can't have these deals, these home run deals we used to have. We bought Geico for like 10, 15 million. We bought the Washington Post for 10, 15 million. Those deals would do nothing for us now. They'd move our market value by like 1%. So that's why he goes out and buys like Burlington North Santa Fe, which is the railroad, for $30-40 billion. It just makes these giant bets now. Or Apple,
Big
right?
Dick Buffett, as you said.
Big Dick Buffett.
Last week. Big Dick Willie. Anyway, man, that is mad. I mean, there's a reason, to compound at that level for that many years. There's a reason.
Well, I need that. We need that DNA, man. It's like, this is the joke, right? Like, people are making fun of Munger and Buffett. Listen, some of the stuff they say about crypto is just insane, right? It's just like, it's so clear that these guys are talking about.
Of course.
Yeah. It's just, but the level of patience, and it's so cliche and corny talking about it, is like, these guys are just sitting and waiting. Just waiting. And how hard is it to wait? This is what happens when you don't have Twitter. You're able to do that. Right? You're able to have that muscle. Like, I don't have that muscle. I can't wait for anything. It's crazy.
Yeah. Well, we're all on TikTok watching videos for 15 seconds. I watched Spider-Man the other day, and it was a great film, but I went to the bathroom for like 30 seconds, came back, and I completely lost my concentration. I was like, I don't even know what's happened. I forgot what happened the first hour. And I genuinely think it's like, because I go on TikTok, I'm entertained for like 3 hours going through these ridiculous videos.
Yep.
Anyway, let's get back to the agenda. But anyway, thanks for summarizing that, boys. The last thing I was going to say on that was, I would ask yourself, has anything changed, like, from what you thought about all this stuff before? Secondly, if you're really feeling as anxious as we are, which, just being honest, then it might mean that you were over-indexed in your positions. And maybe next time that might be something to reconsider as well.
And you might have to build stuff now.
Yeah, and this is a plug for Jack's course. I've paid for it and used it before. I've gone through it. It's very good and helpful. So if you're in the mood to start something for the new year, you should definitely check out.
We'll get a little code. Oh, actually, I have a code up, 25% off. Use code BEAR.
There we go.
Bear.
There we go. Is the code bear market?
Just bear.
No, bear. B-A-R.
Okay.
Yeah.
Oh, dude, that is savage, man.
That's brilliant. That's the most Jack Butcher thing to do, man. All right, so I think that was a good explanation of what's going on. Let's move on to the next section, boys. I think we wanted to talk about earned media, and specifically the McDonald's meme, right? So this could be applied to any brand that people are using their brand for different memes. And as we discussed before, the McDonald's meme in crypto is, we're all broke now, we're going to have to go back to working at McDonald's, essentially, something along those lines. And Trung brought up this point, which was, can you imagine how much earned media McDonald's has had from this? And I'm just going to pull up another example. Give me 1 second. Let me just share my screen here. And this is a Donald Trump example, which I think...
So I'll explain this one. So
I'm
this
right here you go.
All right. So this is like a super famous chart and table from the 2016 election. Now listen, people, we're staying apolitical here. We're looking at this purely from an analytics lens. So New York Times got data from MediaQuant. And what MediaQuant did, is their analytics media company, is they looked at the amount of money that all the campaigns spent in terms of traditional advertising, or advertising across everything, video, television, radio, Twitter, Facebook, social, doesn't matter. So Donald Trump during this election cycle spent $10 million on traditional bought media. The amount of media he earned, which is calculated, essentially media quantity here, they calculated by weighting the reach of each media source based on how many people were likely to see it, right? So that sounds about right, guys? Like you can only estimate it, right? So Trump earned $2 billion.
Maybe we'll just quickly explain. Can I just give a quick summary of what it is? Maybe media versus. So in media and advertising, there's normally like paid, owned, earned. There's like three types of media. Paid is what you just said here, which is you pay for TV ads. If you're Donald Trump or you're not Warren Buffett, Sanders, whoever, you're paying for those slots, and that is across paid advertising. The other one is owned, which is normally like, you own your email list, you own your website, it's your own properties, your own stores, etc. That is where you can message people and tell them a story you want to tell. And then the last one is earned, which is essentially people talking about you. It's something that it's PR, it's influencers, if you want to talk about that, doing product reviews. And in the case of Donald Trump, it's obviously the news media talking about like
how the craziest thing he just said, the craziest thing he just tweeted.
Exactly.
And they said that during that cycle, he had that number that New York Times published at the time was $2 billion. I think by the end of his campaign, 2016, he had earned $5 billion. So this is calculated as if, okay, he got 2 million eyeballs on Twitter or impressions on this one tweet. Let's put a number on how much that's worth. So they basically calculated all that up, all the media mentions, and they said he got $5 billion by the end of it all. And then that's versus $10 in spent. And no other of the candidates got even, I think, more than 100 million in earned media. And so like insane, right? So that is the framework. So Jack, go ahead.
I was just going to say, and there's also like levels of earned media. There's like qualitative, things that you can't really measure from a financial perspective, because some media cannot be bought, and that's why, like, I think when you try and equate it to like this is worth X, it's like it's a good proxy, but it isn't actually talking about like the endorsement of people that are not being paid has X amount more weight in decisions that people are making. Like, if someone's plugging a product and they haven't been asked or paid to do it, then that endorsement levels carries so much more weight with the people who are watching it.
Completely. And like an organic, like if someone just happens to find a product, like Tim Ferriss finds a product, talks about it in his podcast, and he's like, oh, this is the best item under $100, like that standard question everyone does on podcasts, right? And he's like, oh, here's a boxer shorts that you don't have to wash for fucking 3 months. Like, I literally heard him do that, and I was going to Thailand or something, and I'm like, oh yeah, I'm not Sharon, so let me get that.
You're still wearing them. You're still wearing them, aren't
you? But anyway, so that was like, I don't know if he had a plug with the company, but that endorsement, like in media terms, you call that an impression. Like impression is, a banner view, a TV, impression, you saw that one thing. But there's completely varying levels of one impression. Like another example is just a digital version, New York Times front page right at the top, even a paid ad is way more valuable than like below the fold, like some banner ad that you don't even notice, right? So, but they're both measured as one impression. So I think that's kind of what Jack's saying, like even more so, there's just completely different levels. And like, I know people don't always love Gary Vee, but one thing he's actually talked about in Medium, which I actually think is quite a funny way of describing it. He says, what's the value of your mother? And it's basically like the love that your mum gave you. Like, how'd you put a value on that? Like, and that kind of always stuck with me. Is like, okay, yeah, when you're talking about brand and you're talking about a real endorsement, a feeling you have with something, with this podcast, hopefully, like, how do you put like a value on that? You can't really
incalculable.
So, exactly. But, so back to the meme.
Well, you know what? It's like the thing we talked about before we talk about the McDonald's meme was like last couple of weeks, maybe 2 weeks ago, we were talking about how I got that DM. Like random shitcoin is like, hey man, listen, if you can get Elon to retweet or reply to this, I'll give you $50K. I'm like, dude, Are you kidding me?
Ridiculous.
Do you know how much an Elon retire? First of all, he'd never do it, but do you know how much it is? It's worth a lot more than 50K.
Yeah.
But let's talk about the McDonald memes. So, well, actually, Bilal, do we have the one of the president of El Salvador? Because that's probably the funniest one.
I'll look it up while you're
Okay, so there's just like all these flavors of the memes, right? There's like how you made money in 2021 was using like the Robinhood app, and then 2022 is like the application to McDonald's. And then like Michael Saylor posted a picture of him dressed up as a McDonald's server is at the back of the line, right? And like all these guys are leaning into the McDonald's joke. And then I guess it's just gotten to the point where it's like have fun working at McDonald's. It's like the new, but it's like the reverse of have fun being poor, right? You just making fun of yourselves and like kind of owning
by the way,
it.
Here's
but then
a picture for people watching on YouTube.
Unbelievable, man. This is unbelievable.
This is the president. He's got 3.4 million followers. His bio says CEO of El Salvador. He's the president. My man's got a McDonald's hat on his picture. It's
a picture of Nayib Bukele wearing a McDonald's hat. Oh my goodness. 130,000 likes. What's the earned media on that?
Exactly. So, I mean, it's mental, right? So, I mean,
Well, we talk about, okay, let me ask you guys. Okay. So, Jack is the one that worked in traditional media. You pretend to be, you are the head of marketing at McDonald's. What? I'm going to you. I'm like, hey, listen, the president of El Salvador just changed his profile pic. Probably 50 million people saw this, and he's dressed up in a McDonald's outfit. What are you thinking, Jack? It's yours.
You know what? I would do the quote retweet and say probably nothing. They're never going to approve that.
Yeah, but that's what I mean. So what is going through the corporate? What's going through McDonald's corporate right now, Jack?
I think it's a bit of a double-edged sword, right? Because it's kind of the implication is that the implication is like this is for people who've run out of options, which in a lot of cases, like a lot of these people aren't actually in a position where they have nothing and they're going to work at McDonald's, but they're like, I think just pure, and maybe Bilal, maybe you've read or researched this a little bit more. Like there is legitimate uptick in business from sheer exposure of a name. Like I went to this like advertising freaking I don't even know what you call it, seminar, I suppose, like multi-day thing where they were like proving like making the logo bigger works. You know, because all your designers and all the people that want to make like artistic shit are like, no, we need to make it more tasteful and we need to like, you know, be really subtle and clever and stuff. It's like, no, bro, just get McDonald's up there as big as you can. Because as soon as a kid drives past, like there's a couple references for this in the, I think that Founder film. Don't know if you guys watched that.
Oh yeah. Ray Kroc.
Great film. Yeah.
Yeah. Where it's like, the kid is like, we put the McDonald's here because when the kid goes home from school, they're going to like 80% of the traffic in this town is going to drive past this McDonald's, and every kid in the car is going to go, I want to go to McDonald's. I want to go. And if you like have any mention of that in any context,
it'll work. Basically,
it will work. Yeah.
Oh,
so,
dude,
like,
my kid already recognizes McDonald's. It's insane.
Golden Arches, baby.
Yeah.
So like they're benefiting from it, I think. Despite, like, I don't think obviously from a recruitment perspective, this is a good look for them, but from a sheer like, hey, how many people looked at the Golden Arches today beyond the like billion people that already saw it? It's probably another billion digitally. And then like you're driving past a McDonald's and you're like, oh, you know, maybe I'll pull in. There's a double confirmation has happened. I mean,
it definitely works. It's like I'm definitely thinking of a fillet of fish right now, which is the
Bilal. Me and Bilal tried to get a Mackey's last time in New York.
Wait, you guys call it Mackey's in UK? Mackey's?
Mackie D's.
Because in Australia calls it Macca's.
Macca's, yeah, exactly. Yeah. Macca's, yeah. Anyway, and in Ireland, I can't remember what it was, but it was something like that. I think they call it. I think there's another. There's like a
Mickey D's.
Mickey D's. There's a local version there. I forgot what it's called. Anyway, so the only thing I was going to add to what I think Jack actually made a really smart point within that kind of joke-filled rant there. Basically, like it really is dependent on is it positive or negative sentiment, right? Like there's also the old kind of saying around like, what is it? All press is good press,
all press
or whatever, which again, I don't think necessarily in today's age, that's really applicable given like for people anyway, there's a lot of negative press. Like Epstein is not coming back, he's dead now, but like he's not coming back from like bad press, if you want to call it that, or bad stuff that is reported on him, right? So like that is not good press no matter what happens, of course. So like, yeah, I think in this case, obviously it's nowhere near on the level of something horrific like that, but with a company, you can argue like, okay, when Pepsi did that ridiculous commercial with Kendall Jenner we talked about last time, like this, it was like trying to be extra woke and it was like pretty terrible. Like, is that good press or is that bad press? It's clearly bad press, but is it worth them having their brand in front of millions of people talking about it? I mean, I'd argue no, but I don't.
I would say definitely not. Yeah.
Yeah.
Like, because people are going to make a decision based on that, because like Pepsi has showed a lapse of judgment, and your attachment to Pepsi is you supporting that lapse of judgment.
Yeah,
like
exactly.
in this instance, this is like completely community owned meme, and it's kind of in good fun and jest, and like it's like bringing people together in a strange way. So I think there's like some wholesome component to it. Like the fact that Michael Saylor's tweeting out the McDonald's visor is like, I don't even know if they're engaging with that, but man, they should, because anybody who owns any Bitcoin is probably gonna like love McDonald's for doing that. And it's like, they could do any kind of stunt, right? Like we're doing Big Macs for Bitcoin. Like you get a free Big Mac if you've got Bitcoin, just prove it on chain. Yeah, on chain. Mate, there's some funny stuff they could do. You know who are great? I think they have I think it's Droga 5 or Whedon and Kennedy do Burger King's. Oh yeah. Man, Burger King stuff is incredible. Like their marketing is really like, it does like straddle that line of like they did this campaign maybe 5 years ago now where you could get a free, what's it, a Whopper that they do if you're within like, if you leave a McDonald's and go to Burger King. So they like have this thing where you have to go and like use this like geotagged location thing in a McDonald's. And then you go to Burger King after that, they give you a free burger. So I just think there's like, if you had McDonald's as a client right now, there's so much you could do for them. And they got a lot of smart people. They're kind of just so big that I don't think they have to mess around with that stuff. Like McDonald's is kind of like you see like ads for McDonald's on the side of the road, and it's like literally a massive cup of coffee with the golden arches, and it's like coffee 80 cents.
Yeah, and that's it.
They don't mess about with like clever lines or any shit like that. It's just like, come to McDonald's, you know what you're getting. Like when you travel, like a lot of people, the consistency of McDonald's is what they're like. They don't have to compete on like cleverness or any stuff like that. It's just like
they had
staple.
Like Justin Timberlake. Was that Justin Timberlake who did it back in the day? I'm loving it. Is that McDonald's, right?
Yeah,
was it?
Black Eyed Peas, Justin Timberlake.
So I think they've obviously done it over the years, but you're right. Like a lot of their, like it's never just one thing. Like they've got like the generic awareness, like, oh, come in, buy this $1 coffee, whatever. But yeah, it's crazy, man. I would say that I feel like for them, there's probably more to lose by doing something because they don't really understand it properly, the culture of it.
Yeah.
They're probably like, okay, we're going to say something ridiculous, get in trouble. Then we actually get negative memed. Like, because like you said right now, the meme is not really like that bad for McDonald's. It's kind of just like
it's fun.
Bit of a playful joke. Yeah, exactly. So anyway, yeah, anything else?
So what's in summary? What's the summary then? They're getting a lot of earned media. Is the summary?
They're definitely getting crazy earned media. But
I think more people will be going to McDonald's as a result. But you're right. They're McDonald's is gonna. I'll be very surprised if they acknowledged it.
And well, we're talking about it right now. So there's definitely about 7 people on their way to get a Big Mac right now because we planted the seed. If you did, post a picture of your McDonald's and tag us and let us know that it worked. But and this is not sponsored by McDonald's.
And if you're in the media quant space, let us know. Throw us a guesstimate.
Yeah, no, completely. Well, yeah, I mean, the way I've done it in the past is you basically have estimated impressions, mentions, times by a CPM, which is like cost per 1,000 people, which is obviously you could have a $5 CPM, you could have a $500 CPM, but like that is kind of how you would.
Well, dude, let's let's just have a fun one right now. Let's do one for the president of El Salvador. Let me pull my calculator. Okay, it's 130,000 likes. So let's say 1% of people liked it. So what is that? 13
times
million.
100.
So 13 million impressions. How about that?
Oh,
20 million? 20 million
boys,
impressions?
45 minutes ago on this live recording, McDonald's tweeted, "How are you doing, people who run crypto Twitter accounts?"
Oh my goodness.
No way. That's hilarious. Wait, let me pull that up.
Wait,
it's getting a lot of engagement. Yeah. So they got in on it, man. Prediction was wrong.
You're doing your public math. Go on, you can start with what you're saying.
McDonald's acknowledged the noise. They will not have a labor shortage for sure. I'm just reading some quote tweets out here.
I'm just seeing it. There's no point me sharing the screen, but how you doing people run crypto Twitter accounts? That's hilarious.
Yeah.
I mean, honestly, the amount of people, I'm just wondering like how many people are reading that and thinking like, what the hell are you talking about that have no idea what this joke is? You know what I mean? Anyway.
Oh my God. People are calling that's the bottom. Like that's the bottom. The bottom signal is McDonald's tweeting it out.
All right, so Trunk's still doing his math over there.
Okay, hold on, Bilal, hit me quickly before this McDonald's thing. Go throw me some CPM information. So I'm just gonna call it 30 million impressions on that one tweet.
30 million. Now what you need to do is divide that number by 1,000.
Okay.
Yeah, so knock 3.
Yeah, 30,000. And then what's the CPM you're
and
gonna
now times that by on a very low end $5.
So they're just saying
that means
off of
to
his
reach
tweet.
like on paid media side to reach 1,000 people might cost you $5 on a very low end. Obviously, podcasts like this would be like 50, you know, but like
easily,
100 or something like that. But
yeah,
like,
well, because our audience is crazy, right? We got the best, insane audience. We have insanely smart.
Yeah, so you got that idea. So what was the number in the end for the
$150,000? That feels
just
low.
for that one tweet.
Yeah,
I would say it's probably worth way more than that, but that was on a very low end. Anyway, if you've made it here so far, that was the public math section, and we got the McDonald's meme going. Anything else on that, boys? I think that's quite interesting, actually, because I think it ties in with a lot what we talk about here, which is memes, the value of idea spreading, and a lot of like investing side is nowadays has been so narrative based. So a lot of this is based on this. Anything else before we wrap up on the last section?
No, that was great, man. I love bad math section. We should do it once a week.
I know in your head you're doing it for your tweets as well, because I know your numbers for the month. I don't know if we're allowed to share them, but like the impressions you two get just on your tweets is mental, right? And if you times that by the $5 CPM minimum, you and that's not even including the endorsement from Jack Butcher from Trung Phan. It's a very different vibe. So that is a subtle way of saying if you're a big brand who wants to partner with NIA this year.
Subtle.
That is.
It's gone from subtle to explicit.
Yeah. That's
McDonald's who do.
I mean, that would be hilarious. That would be the best. That would be the most on-brand thing we could do. All right. Talking of which, let's wrap up with this, boys. Twitter launched NFT profile pictures. That was last week. So the news has already come and gone with that, but I wanted to get your take on this. This is something people have been speculating on for a while. There were leaked pictures months ago of the Twitter product team showing they were going to have essentially a way to change your profile picture, but with a verified NFT. And what happens now, instead of having a circular profile picture, it's like a hexagon, right? So it's whatever your NFT is, that's connected to your wallet. It's a hexagon. So I want to get your take on this. You two are big, Jack, you're obviously in the NFT world. You sell your own NFTs. You've bought a lot of NFTs. Both of you have got prominent social profiles, still pending verification. But, is this another form of verification? Like how do you see it?
It's a feature of Twitter Blue right now as well. So you can only access it if you pay, what is it, $3 a month for
it's their paid subscription,
Twitter
right?
Blue.
Yeah.
Yeah, which I think the backlash has been significant from the NFT skeptic crowd for many reasons. Like Twitter has had there's a load of memes about the features that people have been requesting from Twitter, right? Which are like, we want an edit button, we want, I don't know what the other demands are, but people get people were furious when this announcement came out. Check out that quote tweet ratio and scroll through that if you want a bit of entertainment and just get the general. I think I would say like the mainstream culture's response to this is like not psyched about it, to be quite honest. And the verification thing is somewhat accurate, but it's also like any NFT that is recognized by OpenSea will pull into that. So unless you're fluent or savvy enough to know that NFT is connected to that official collection of the thing, it doesn't actually provide like a foolproof verification you're the owner of. Well, doesn't, in the same way that like anyone could take an image, remint it, connected to a different address. You could then technically pull it in as a verified NFT, but it wouldn't be attached to the collection that it may have originally been attached to. So feels like people, to me, like, go on.
Go. I don't finish your thought.
I was just going to say, I think it's just like a signaling thing within an in-group, right? Like, I think to me, it doesn't really offer that much more significant verification, but I haven't really dug that deep into it, where there may be people like doing a little bit of shady business and trying to, pose as being in a different position than they're in by like, it's like an additional level of verification beyond the blue check, right? It's like I'm attached to this collection, and obviously anything finance related, we know the Twitter comment section is just completely full of like
unusable,
the most outrageous like scam tactics going. So I think this is like maybe gonna temper that slightly, right? Like people who are like negotiating in DMs and doing like, buying and selling these things between each other, it makes some sense that you would verify that if that's a good segment of your user base. And like, I think Twitter is catering to this world of NFT owners, collectors, artists, because I think they see themselves as they're a huge platform layer in this whole ecosystem. None of it would really exist without them. And obviously these people are spending money, and Twitter is, a for-profit business.
Because right now they've gotten zero of it, right? Like they've made $0 from this crazy 2021 we're talking
from the
about.
NFT craze.
People coordinating and marketing NFTs and Web3. Zero. They made $0. They made $0 from it.
Maybe a little bit of it increased ad revenue from the extra traffic on the platform, but nothing connected to it directly.
Crazy.
Well, sorry, Jack, can I ask a quick question? Because I know there's someone listening to this and they're thinking, all right, what's the point of this, like, in the first place? Like, I think we talked a little bit about that there, but from Twitter's point of view, and I guess my point of view as well, I'll just share, is the only reason it's significant that I even brought it up is with seeing examples of experimenting with stuff everyone's been playing around with on a mainstream platform, right? And like a potential use case. Like right now, the use case is not really fleshed out. Like it's like, oh, you can prove ownership of something. So I guess the benefit is if you own a CryptoPunk and someone has copied it and right-click saved and is using that identity on their profile and gaining all the signaling upside of that, you have a way of saying, actually, no, that I own this one, and whatever else it is that you in the future might not be a CryptoPunk, it might be something else. So is there anything else I'm missing on that side? Like, I guess that's the kind of reason they've done it, or is
well, you know what else? I think they'll do it to influence a social graph as well. Like that's going to be an interesting play for them, where it's like
there's another signal for them now. They can pull that in.
They can make a Twitter specific to this community or that community, or have, like you interface with, or the people that are in that community, their tweets, jump the algorithm in some way, shape or form. So there's incentive for people to pay Twitter for the service of like a deeper integration with the community. Like Discord is actually just a completely chaotic product, honestly, for the majority of people that aren't, we talked about in this last episode, like are not built to like look at basically like a spam chat of like a YouTube video. You ever watch like a live YouTube video with a lot of people watching it? It's
so
just like unusable.
Follow. Yeah.
Yeah. So Twitter, I think
Discord quite hard to follow. Like if you go in after 2 days or 1 day, like because there's no threading of comments, like you kind of have to go all the way up. You don't know where the conversation starts. And I don't know if I'm using it like a boomer, but like that's kind of, I've heard other people.
I've never gone into.
No, you're right. That's the point I'm trying to make. Honestly, is like it's just like these are like there's a huge barrier to entry for these things, and they're like obviously like now these big status symbols and signals, and Discord abandoned their Web3 verification thing. If you'll remember, there was a big backlash from the gaming community. It was like, do this, and I'm gonna cancel my subscription and take all my the community, people that I interact with are coming off as well. So I think this is an interesting play where it's like Twitter can ride some of that momentum that these communities are creating, and they probably have ambitions to become like the de facto place for these communities to like come together and communicate. I think Space is another feature that is like huge in this NFT world. It's almost like, think of CNBC as having a relationship to like the real-time market movements in more traditional markets.
That's such a great analogy, like CNBC for kind of Web3 NFTs.
Yeah, and like Spaces, that's it. It's like, hey, this project is launching. There's 5 or 6 like prominent names in the NFT space, or interview the artist or the founder or the team. This almost getting to this like WWE level of like dramatization.
Kind of like what NIA Daily is going to be, or Daily.
Exactly. We're just villains. We're bringing in villains and victims.
Listeners, we're teasing it. It's coming.
Trunks,
you don't think
Trunks ready, standing.
For the listeners that aren't watching video right now. Sorry, Jack. I didn't mean to cut you off.
No, go.
I'm standing. I will be standing for the rest of 2022, people. Trung Phan will not be sitting on a I will be standing until we're out of this bear market and until we have a daily YouTube. I'm standing all day, standing everywhere. I'm standing. I'm never not going to be standing.
Live stream fan.
Basement fan.
Fan is ready.
We got FIA fan, front seat fan. What was the last one? Basement fan. Now we're standing fan. Standing all year.
That sounds like something you buy at Argos.
Yeah, exactly what I was gonna say, Bilal. 3 speeds. Yeah. That's why I think. That's why I think they're going to be like the permissionless media platform for. I mean, they already are for crypto, but NFTs have this like obviously more. They're pulling in more people from pop culture, artists, footballers. I mean, everybody at this point. There's a huge. We've talked about this maybe before we were even talking about NFTs, like the open nature of Twitter and like the open nature of media and social graphs is completely different to old media models where like these narratives can take hold really quickly. And I think without Twitter, 2021 would have been very, very different. Like every financial market, I think would have been, dare I say it, a lot calmer without a network like Twitter. Like it's really remarkable how you can see in these like tiny communities, if a certain person tweets about a certain project, you can then go and watch the activity on that project. And it's ding, 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 ding. In the same way that like Wall Street bets move markets like order of magnitude simpler than Wall Street bets, right? You don't have to read a 10-paragraph thesis on Wall Street bets and click through all the comments on Reddit. It's literally a tweet goes out, or if you hear something in a space and you're making financial decisions based off.
This is why Buffett is winning, by the way. Like, this is like, you know what I mean? Like, honestly,
he's just eating McDonald's, having his Diet Coke, and
he's not on Twitter.
Newspaper, and that's
he's not. He's making one decision a year, and and he's richer than everyone. Like this is actually a great point, right? It's like this dude is just letting these money making things that he's invested in just keep on compounding slowly. He's on Twitter every day. Like, dude, think about what we opened this episode with, the whipsaw of emotion we've been through. This dude's not even looking at the markets, right?
He's got no idea.
He's gonna look back in a year and be like, hey, how was 2022? Oh, we're up like 60% this year. Cool. Added to the other 20% a year we've been doing for the last half century. Hilarious.
Yeah, you know, another thing.
Go on, Jack, go on.
I was just going to say, isn't it like 5% of Americans have a Twitter account, and then like 50% of that 5% have ever sent a tweet?
Oh, I've never.
So it's, 50% have, 50% haven't, and majority is like 10 tweets. So it's probably like hooked up from Instagram or something, right? It's like, hey, I'm at this place. So it's like this reality distortion field as well, where you assume that the narrative you read and hear on Twitter, because it's your primary source of media, is how the world is consuming information. And for the most part, it is not. But I think Twitter is being smart in positioning themselves at the, like, you know, building the tools for the people that are building like internet native economies. We want to be the platform for people that are in that space, and they'll cater to the 500,000 NFT users before they cater to the 50 million like anime fans or whatever it is going on, or K-pop hordes of like kids, because these people in buying and selling NFTs are probably in their 30s, obviously have disposable income to waste on this stuff. As a cohort of people that you want like spending money on your service, that's like, you know, to quote Logan Roy, money wins.
Well, the BTS gang is, I don't know if you have seen, they are absurd. They do anything BTS does, they blow it up. Millions and millions.
For people
of
that BTS are, could you,
the Korean supergroup.
They're like K-pop,
group, yeah.
Yeah, I think that's an interesting thing to bring up too, is like when, I don't know if it's an if, I think it's a when, like when all of these like really huge like cultural forces get involved in markets in some way, I think it's inevitable. You know, there's going to be a BTS token,
Coins
BTS NFT, and it might make Bored Apes look like a penny stock. You know what I'm saying?
The example I was thinking of, which again happened, I think last week by this point, Nelk boys, they dropped an NFT.
Yeah.
Did you see that? And I haven't followed complete after, but I went into the Discord like a night before. There were 300,000 people in the Discord, and there was only 10,000 NFTs you could buy.
Yo, 300,000.
That's huge. Yeah, that's massive.
And for people who don't know who the Nelk boys are, they're kind of a collective. They're like the modern day Jackass on YouTube. Like,
they're Jackass YouTube Canadians.
Yeah, Canadians. Like, they're kind of like frat bros. They do like mad parties, full send or whatever it's called. And look, they've cracked YouTube at another level.
But here's the thing: they're demonetized. They don't make $1 from YouTube.
That's
all
true.
Their money comes from swag, and now apparently
Swag.
Demonetized as in zero, Trung. Like they don't.
They can't run ads. Because their shit
they don't
is
make
too
any ad
wild.
money on there or something like that.
Wow.
So their stuff is wild because they'll literally just go and like moan in people's ears, like in the supermarket. Like, it's ridiculous. Like, just do wild. They went to like South America and were trying to pretend like they were smuggling drugs, like doing wild stuff that, you know, like objectively is quite funny, but it's one of those things you kind of feel bad for watching it almost. You're like, all right, I'm feeding the frenzy. I don't really want more of this content in the world, but then secretly you're like, oh, this is hilarious, you know?
So P&G doesn't want their ads running next to that.
Yeah, exactly. So they have to kind of do it themselves. They've got, you know, amazing content.
They made 70 mil last year. We talked about it. They made it 70 to 100 mil. Insane.
It's crazy. And now,
someone told me the other day their seltzer brand is worth like 200 mil already. They launched it a couple months ago.
Happy Dad or something like that. So they've got that as well. And now, I didn't follow the NFT stuff, but like how much is sold or however it's working. But I think they're very, very savvy. Like they're surprisingly, like when you're just watching their videos, you're like, oh, these look like college kids doing wild stuff.
No,
but the amount of stuff they've done, they've created a membership club. Like if you look at, I hate to use this phrase, but the creator playbook, they've kind of killed it in every single way.
Yeah.
And even on another level, like they're doing traditional brand building at a very high level. They've got like the UFC founder or the head of UFC, Dana White, owner, doing collaborations with them. They're like flying on Trump's jet, like when he was still president, like doing wild stuff. So anyway, you can hate them if you like, which is fair enough because you might not like this stuff. But man, what a wild!
You can learn. It's like Barstool. Thing. You can learn from whatever he did. Porno, you can learn from him.
100%.
Jack, let me opine on the. Do we have anything else to cover? Because I can just drop one last thing if you guys are talking about.
No, let's go for it.
Well, Jack just talked about Logan Roy. So I just started watching Yellowstone. Have you guys seen this show?
No.
Oh, yeah, man. I love Yellowstone.
Oh, my. What season are you on, Jack?
I finished it.
You're done? I just started season 1. This show is so good. It's so good.
What is it on, by the way?
It's
Paramount.
It's on Paramount. It's actually involved in a very interesting situation because NBC, Peacock, all these different streaming services under one umbrella. One of them owned like the first 3 seasons, but didn't invest to keep it for the long term. They didn't realize what it would become. And then so
people that don't know, I heard it's like
it's Succession for in Montana. And instead of a big media family, it's a big ranch owning land, like old school Montana family. Kevin Costner plays the role of Logan Roy. He is John Dutton. But Jack, you can opine because you've seen it all. I'm only 5 episodes in. The only reason I want to bring up is I'm going to be talking about this shit the same way I'm standing every episode. I'm going to be talking about this every episode of 2022. So I cannot believe how good this show is. It is incredible. And then the last thing I'll add is the guy that made it. We should do an episode about him, Taylor Sheridan.
Oh, mate, he's in it too. Have you got to episode where you see him?
I haven't got to him yet, but what I'm going to say is this.
Spoilers.
He did not start writing as a screenwriter till he's 40 years old. He's an actor. One day he took out his wife's credit card. They weren't doing super well financially. Bought Final Draft, which is the screenwriting software. And not investment advice. Not investment advice, but it's been game over ever since. If you guys have seen the movie Sicario, that's him. How good is Sicario?
Oh, for real?
Yeah, he wrote Sicario.
What a king.
Dude,
what a ledge, man.
Unbelievable, right? So he's in Sons of Anarchy.
This is not a spoiler. This is not a spoiler, but he is like, you would like, he's in it as an actor and you would think that was his craft, just acting because he's that good. Yeah.
He's an incredible actor and then just decided to be a writer. And he's the only writer on the show. This is what's crazy. A show of this caliber, which if you compare Succession has a writer's room. Probably has a dozen people writing for the show. This dude writes it all by himself.
Oh, that's wow.
Yeah, I can tell you as a failed screenwriter how hard that is.
Yeah, and I was going to say, Trung, because if people have read your bio on Twitter, they'll know that you wrote a screenplay, right? That got sold to Fox.
I wrote a screenplay. I wrote co-developed a TV show that's actually might get made, which we will be talking about. But the whole point is like, the crazy thing is like, this guy's doing it by himself and he started at 40. So we're going to do a whole deep dive on Taylor Sheridan. He's a monster, absolute monster.
And we should try and get him on. I'm sure you could. I'm sure.
Oh my God, that's interesting.
That'd be badass. I was just gonna say, I'm gonna mess up the statistic because I can't find the exact quote, but I read something the other day where like Yellowstone it was either 20 or 40 times more popular than Succession in the States viewership because it's so much more of a like widely appealing subject matter. Yeah. Fascinating. And I remember Succession. I watched the first episode. If you went on Twitter after the first episode of Succession aired, whenever that was, people were like, this sucks. This is fucking stupid. Like, I don't like the way they did it. It's like too dark. And then like it aged in. Everybody started to appreciate it. But Yellowstone, man, is like, it's just a great piece of TV. I'm jealous.
I love it.
Yeah. We love it, man. We love it.
It is. I think, Jack, your point is so good. It is. We just talked about it. The NFT bubble on Twitter is the same with the media bubble with Succession. If you're on Twitter, like the circles we run in, Succession's all you hear and see about a finance Twitter or tech Twitter.
Yeah.
Nobody gives a shit about that outside of these circles. It's all Yellowstone.
Well, to be fair, Succession was still like.
Oh, it's a monster show. But like to Jack's point, Yellowstone is like.
You're saying Yellowstone's better than Succession?
No, it's like the amount of people watching it, the popularity. It's not even close. It's night and day. If we stepped outside of our circles and looked at the stat that Jack, I don't know if it's necessarily the number, Jack. I've heard something similar, but like it is
many multiples.
Multiples viewership.
Bloody coastal elites, mate.
Yeah. Man, I ain't about the basement fan is not about the coastal elite life. I'm about standing.
Flower hoodie.
Do you think I'm going to sit in a comfortable chair? No, I'm going to stand. And I want to talk about Yellowstone. Yeah. I am the people's champ. We are the
Wait and see what Trung's wearing in a few weeks after he's put a few Yellowstone episodes away.
Yeah, with a little hat.
Cowboy hat.
Oh my God, hilarious. All right. Well,
he's got like the wood paneled office and the moose head in there.
Yeah, right here. Moose head.
A saloon. It turns into the van saloon.
Yeah.
Right.
Yeah. No, it's like, it does make you want to go live on a ranch for sure. And even though it's like all of these shows are like stressing you wouldn't want to swap places with anybody you see in any of these shows. Obviously,
being rich sucks is the takeaway from watching Succession and Yellowstone. I don't want to be FU rich. It doesn't look like fun.
Well, thankfully,
we should definitely.
You no longer are. So
yeah.
This month.
Hey, Trung,
you may have been before. But...
No, it's like Trung. I don't think you have to worry about that, man.
Yeah.
You're safe, buddy.
All right, boys. Should we wrap it up?
We'll try. Last thing, I'll put it on Jack before Bilal wraps it up. Stretch goal. We're gonna try to get Taylor Sheridan on the NIA 100%. Podcast.
You guys, little DM. I'm pretty sure. I mean, Hassan Minhaj talking about you. You already been exposed to the Hollywood fan life. So
you've been on CNBC 3 times or 4.
Hey, we're past 5 now. But all I know is this, man. I actually resurfaced the first one where I said I like ARK ETF. I went, ooh, that was not looking too hot right now.
I was gonna close it off. I was gonna close it out with it, but no. Oh wait, 1 second. Yeah. So the only thing I was gonna say, boys, is was there anything else to wrap up before we?
No, it's perfect, man. This is great. I can't wait so for the listeners and the viewers, just know that in the following weeks, Jack and Bilal will also be standing. We are going all standing soon. And the energy, I got to say, the energy level is just complete. I mean, last week, I thought we already got some comments, right? It's like, man, wow, Basement Trung is like, it's on a different level right now.
Free.
It's free, man. I'm like, it's totally different when you're free. Like, you're not like all clamped in. It's like, I don't know how to explain it, but it's like the opposite of the vibe that we're all feeling about the market's tanking. It's the opposite of that.
Yeah, completely. All right, Jack, did you have something there? It looked like you're thinking about something.
I'm always Trung's always getting my gears turning over here, but I can't be going on another rant. So I'll leave it till next week.
It though. Jack, are you excited for standing Jack? I'm excited.
I'm very, very excited.
I might do it right now. Let's see.
Bilal, get the arms.
Bilal, get up, man. It's a different energy, dude.
He's got the electric desk. Look at this.
Yeah, I'm
Coastal Elite.
2020. This is 2020 levels of wealth.
Yo, can you stand? Can you stand, bro?
Yeah, I'm standing right now.
Okay.
Oh, mate.
Dude, you gotta do it. Actually, but if you need to hunch, that's gonna be great. Can you do it comfortably? Oh yeah.
I've got like the autonomous one.
Okay, yo.
Not sponsored by. Anyway,
you got to do standing, man. It's another level, dude.
I normally work. I used to only work standing for ages.
Wait, Jack,
you just flow.
It's a different energy. It is a totally different energy.
I feel very left out.
Jack's really like living in his in-laws' place right now, so he's not got his standing desk ready, but he'll be setting up the NIA studio.
Oh my God, Jack, you have to move to Tennessee from Atlanta. Yo, I moved 3 blocks and it was the worst thing ever. You're about to
mate. I'll have a few stories for the next couple pods, I'm sure. Should be in the next few weeks.
Just awful. It's awful.
Yeah. I got a lot of good moving stories. We'll do a segment.
Let's do a whole moving. Yeah, some terrible.
Okay, Bilal, you're standing for the rest of 2022. That's our promise to the listeners.
Yeah, that's it. All right. Well, we're standing until Bitcoin hits 69K again. Until then, I'm just standing here. I'm eating my food here. I'm working here. The whole thing. I probably won't even leave my house. I'm just going to keep it going. Anyway, so as always, thanks for listening, guys. We really appreciate you guys. And I hope you're hanging in there. I know it's been a crazy few weeks for everyone. And I hope you're still enjoying the pod. What I would ask for you guys is this first part of the show especially. I get asked this question all the time from people, like, why is the stock market dropping? Why is crypto dropping? What does interest rates mean? So if you've had anyone who's asked you that, clip that, send it to them on YouTube and just say, look, this is going to explain it to you. And that is the best way you can help us keep growing the pod. We've got lots of plans for you guys this year. We've been meeting about that. So just stay tuned. And otherwise, thanks again for all your support. We love you guys, and we will see you on the next one.